Hello and welcome to AQA Accounting. In this video we'll be going through a section B question 15 from the paper 2 2021 accounting paper. So it's page 14, question 15 that you want, and we'll get started now. Okay, so question 15 is basically the second question in section B, which is a break-even question. So that's the first one, break-even. I'll go through 15.1 and 15.2 because they are linked. They're both calculation questions. The second part is basically a marginal costing statement. Okay, so let's make a start. Quick run through the data. Quite wordy actually. Management questions do tend to be like that. So let's run through the data, see what we need. So we've got a company, UJW Electrical, they produce washing machines. New machine launching from August in a new factory, and there are two options being considered. So we have factory A, factory B, we've got the capacity, we've got the rent figures, the salary for the manager, the number of staff. We've got the selling price, 750 in A, and in factory B that will be less 10% because they have economies of scale. We've got royalties, £15.40 per machine. We've got factory staff on monthly salary of 1475, and each completed washing machine's got £20 labour cost as well. Materials are higher quality and they're going to be 40% more than the current cost. The current costs are 177. Okay, so we've got a range of data. We've got capacity, we've got fixed costs. The factory staff is fixed costs as well because it's a monthly salary. Selling price for the machine, two different selling prices. Royalties, variable cost. £20 variable cost. 1475 fixed costs, and then that's part of our selling price as well. So we've got a range of data for marginal costing. Question is, calculate break-even point if 1450 units are produced and sold using factory A. Okay, so what do we need to do? So in terms of the question, the first thing that we need is the formula for break-even. So break-even equals to FC over C, fixed cost over contribution. Now in terms of fixed costs, we know what these are, and they are 38. Remember factory A. Okay, we've got the £38,000 for rent, plus the manager salary, which is 27,295, and then we've got that selling price, we don't need that. Royalties we don't need right now. Factories at 1475. Now this is 1475, and that's for one person. We have 4 people, but that's per month. Watch this. This is where they're trying to catch you out. This is, look at this, annual. What's this? Monthly. What should you do? Convert it to annual. How do you do that? You times by 12. So what I've done is 1475 times by 4 people. That's what all 4 would get on a monthly basis, and then times it by 12. You can do this a number of ways. You can, as long as you get the figure at the end. So that's basically the fixed cost. Now if I get my calculator, I'm going to do the 1475 first. 1475 times by 4 times by 12 is 7,800. And I'm going to add these on top. Plus 27,295 plus 38. Now that gives me FC equals to 136095. I'm just going to double check that again. Okay, because we've got a number of calculations here. I want to make sure that my figures are correct. Okay, and I've got that, and I'm happy with that. Okay, the next thing is contribution. Now, contribution equals to the formula is SP minus VC, the selling price minus variable costs. The selling price, remember they told us here, is 177, but that's going to go up by 40% times by 1.4. 177.40 times 1.4 is 24836. That's the selling price. What about variable costs? Now, variable costs, they are, sorry, I think I've made an error. That's not selling price, that's variable costs. Sorry, that's my mistake. Sorry, let's do that again. Variable costs are 177.40, and the variable costs are going up 40%. So that's variable costs. So we might as well carry on with the other variable costs. The other variable costs are the royalties. So VC, that's number one. VC number two is royalties. Now that's materials. I'm just going to make a note there. That's materials. Royalties. Royalties are £15.40. So we've got, that's the selling price there. That's the VC. That's VC. The labour cost of 20 is also a variable cost. This is labour. Okay, let's add that up together. So 24836 plus 15.4 plus 20 is 28376. Okay, so in terms of the formula, we have variable costs we've done. Selling price is 750 in factory A. Okay, so remember our formula? Contribution equals to SP minus VC. VC we have 28376. Our selling price 750. 750 minus 283,750 minus 283.76 is 46624. This is our contribution. So we need that, and we need the fixed costs. So FC over C 136. I'm just putting all my data together now. Divided by 466.24 equals, right, I've got 291, my calculator's there, 291.89. Something that you should know for break even is you have to round up. So 291.89 becomes 292. This is our answer. 292. I'll double check that in a moment. Okay, that's 5 marks. Done. Let's move. So 15.1 is done. 15.2. That's 15.1. Okay, 15.2. So they want us to prepare a marginal costing statement, revenue, contribution, profit. They've made it very clear to you what you need to do. Make sure you show that. Revenue, contribution, profit, if 2,000 units are produced and sold. Now, the template is pretty much blank, okay? So you need to know your format for marginal costing, and I'll show you what the template is as I work through the question. Let's go up. So all we need to know from there is factory B. Okay, factory B. So marginal costing statement, the first thing that we want is sales revenue. Sales revenue. What I'm going to do is I'm going to just do my final figures over here and my workings on the left, just for the purpose of this. So that's my workings and final amount. Okay, so sales revenue, 2,000 units. And we are going to sell them at £750 less 10%. So 750 minus 10%, which is 62675. Okay, so 2,000 times 675. Okay, so that's 1,350,000. Okay. Right, the next thing is, in terms of marginal costing, sales revenue, then we have variable costs. Okay, in terms of variable costs we have, again, you can sort of use that as a guide. You have materials. We've got royalties. And we have labour. Now the materials are the same for A and B. It's the same. So if you've got that, you can use it. So this is 248.36 times 2,000 units. We'll do the calculation at the end of this. Royalties are 20. Now there is a different alternative format you can do. Instead of doing it like this, you could just do sale SP minus VC equals contribution and then times it by the quantity, so that you can do a shorter method. Okay, in terms of labour, it's £20, so 20 times by the 2,000 units. Okay, let's just calculate this. 248.36 times by 2,000 is 496,720. 20 times 2,000. Royalties are, sorry, I've made a mistake again. Royalties are £15.40. Let's change that. I was wondering why they're both the same. Okay, so that's 3,800. That's £15.40. Just pay attention to that one there. £15.40, not £20. The labour is £20, which is your 40,000. Okay, so we've got total variable costs 40 plus 3,800 plus 496,720. That equals to 567,520. Okay, so we've got our sales revenue, we've got total variable costs, and then we have contribution. Contribution is SP minus VC. 1.35 million minus 567,520 equals 782,480. Okay, now like I said, the shorter method, if you wanted to, would be 675 minus 248.36 minus 675 minus 248.36 minus £15.40 minus 20, and that would give you, I'm going to do a quick calculation just to check it anyway, it's good to check. 675 minus 248.36 minus 15.4 minus 20 is 39124, and then you can times it by the 2,000 units. Times by 2,000, 782,480. It's the same figure. Okay, so there's two ways. You can either do that way and then times it by 2,000, or you can times each one by 2,000. This is the longer way. Anyway, let's move on. Contribution. Then we have fixed costs. Minus fixed costs. From here onwards, it's the same. Whether you go for the short or the long, from here, it's the same. Fixed costs, we've got the rent. £42,000. Okay, 42,000. Then you have the salary for the manager, which is 27,295. Then you have the staff, the 1,475. This is the salary for staff. For staff and for the manager. Okay. Now, in terms of the staff, remember, it's 1,475 times by 5 people times by 12. Times by 5 times by 12 gives you 88,500. Okay, and that adds up to 157,795. That's the total fixed costs. So contribution 782,480 minus 157,795 gives you 624,685. Okay, that's the total fixed cost, and this is your profit. Question says, show revenue. Well, there's revenue. Show contribution, and profit for 2,000 units. Okay, so that's pretty much done. It's a relatively straightforward question. They're only trying to catch you out, really, is paying attention to the 750, the 10%. Royalties, do you know what that is? Okay, do you know that that's a month per month, and then you've got to times it by 12 to work out the annual? That's a variable cost. Can you adjust that with the percentage? Some basic costing elements here. Okay, so that's the end of the question. I'll just share the mark scheme again with you so you can see what there is. So that's the mark scheme over there. Again, just checking obviously what we've done. We've got 292, and we have two methods on here, 624, 685. So that's method number one, which they've done, and you can do the individual contribution, times it by the total units, and then work from there. Both are acceptable. Okay, I hope you've benefited and enjoyed from that. But yeah, that's pretty much that question done. And we'll leave it there. Thank you for watching.